Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. J.P. Morgan once said, "Millionaires don't need astrologers, but billionaires do." And so, we begin. Today is Monday, April 29th, 2024. Theme of the day, memes and bear flags, and we'll be talking about that. Later this week, most important data coming out is Wednesday. We have ADP employment, ISM manufacturing job openings, and of course the interest rate decision, which is obviously no cut. We already know that. We don't even really need to talk about it unless we get a curveball there, which will not happen. 100% chance of not happening. Then later this week, Thursday, initial jobless claims, U.S. trade deficit, factory orders on Friday, U.S. employment report, U.S. unemployment rate. This is the biggest one I'm looking for. And ISM services. Again, this unemployment rate, I have been saying, has been looking like on a zoomed out chart, it's been ticking up and up and up. It'll be very interesting to me to see what this number says in particular. The weekly time frame of the S&P 500 still extremely relevant. This chart showing 1 week per candle, as I've been talking about, the 3 black crows here. I can actually see the S&P 500 perhaps getting up to the bottom of the first candle, where people sometimes call it the scene of the crime, where the breakdown really all started. And so there will be major resistance here, and it looks like we might be wanting to reach up for it. We might hit it, and if we do, I might consider shorting here actually at this point. And that's only if we actually get there, about 5,200 on the SPX. On a daily time frame, we see another interesting pattern developing on a closing basis. That's where I'm getting this bottom line here. You can see what looks like a closing wedge bear flag, and this might be the end of it. We may not get to that scene of the crime that I mentioned. We might actually be breaking down from here, and if we do so, we can imagine getting at least halfway down this wedge, looking at 53 on SPX, the S&P 500. Looking across many charts today, we saw a similar looking bear flag, and the opposite in the dollar as expected. We had a rally in what looks like a bull flag, and it looks to me like it's likely we will break out of this moving higher. That means the dollar goes up in value, and stocks typically go down in value, or at least have pressure to go down, along with gold and pretty much everything else when the dollar is getting stronger. I'm not going to go through all of the charts that I saw this pattern, but I do find it interesting that I'm seeing a lot of these bear flag looking things that are looking like they're coiling up here, and so this could really be the end of the bullishness, the short-term bullishness that we have. We might see things break down, at least that's what it looks to me like in the charts. We are petering on neutral. We're right at the top edge of fear, but still in fear mode, according to the CNN Fear and Greed Index. And then on the VIX, I have been talking about in shows ever since Monday, April 22nd, that it looked like we might be headed down to this line, and it looks like we are doing that exactly. Will we get to this line? I don't know. It looks like it wants to go there, so we'll see how that plays out. On the 30-year bond yield, I said that we might be at a top, 3 trading days ago. And we went higher, and then we've been breaking down from here. And I just noticed I'm starting to see a potential pattern here. If you look at patterns ever, you know what this is. This can easily turn into a head and shoulders top here in yields. And I think I think we're headed lower on yields. I still think we are not going to keep going up in yields, but that's just me and my crystal ball. Last very notable event today, Tesla stock going up 15%, basically on market rumors is what I would call them. The approval of self-driving cars in China apparently just went through, and so everyone is super excited about Tesla. Now, how that's going to play into what earnings actually look like for this one company, it has yet to be seen. And this is why I said memes and bear flags today, because once again, there's a lot of meme pricing out there, a lot of meme stocks that still have so much speculative value. I think it is very important in times like these to take a step back and look at the bigger picture and realize that we're still in what I would call a stock mania. You know, we're not seeing everybody saying, "Oh my goodness, I wish I didn't own any stocks. I wish I never got into, this stock that had gone all the way up and had all this speculative value." And it's like it's very obvious on the other side of it. We're not on the everyone's running away from stocks, everybody hates stocks yet. And it's very important to remember there are times like that that exist in history. There are many times that exist like that in history where everyone says, "Oh my goodness, I can't believe how much money I lost in the stock market. I hate stocks. I don't want to have anything to do with them for the rest of my life." We're not in a period like that. We're in what I would say, as far as, fear and greed goes, it's funny, the fear and greed index on CNN, this is like a day-to-day amount of fear and greed. From a longer term zoomed out perspective, we're still in what looks like full on greed mode. We haven't broken the back of the retail investor yet. And once people start realizing how much speculation is in the markets and things start turning south, then the whole story will flip. People will be running into safety, and that's it. Hope you enjoyed the show. Thank you for watching. Robschild.